A client called me last week and their mortgage payment had gone up by like $800 a month. She was in full freak out mode. You are in the right place. If your mortgage payment has gone up, if you don't understand, if you want to make it go away, if you want to know what the options are, if you want to know if you can waive the escrow and just get rid of that darn thing, I'm going to answer those things for you here today. And let me hear your questions. We're streaming on all platforms. This is such an important topic. I've done this. I'm a lender in Texas. I've done this for 28 years. I have helped many a past client through escrow. So I super understand it. And I've had escrow shortages myself. I've gone through this, not only with clients, but with myself as well. So you're not alone. Not only do I have people calling me, asking me why their payments have increased, but again, I've done it myself. So are you shocked by the increase? Are you up at night thinking, oh my goodness, how can I solve this? What is going on? So that's what we're going to answer. I'm going to give you one power tip right now. I've actually got 5 tips on how to lower your payment or how to make sure that this doesn't happen again. I'm going to give you the first one right now. Call your mortgage company. You have to call them direct, whoever you make your mortgage payment to, who might be different than who you did the loan through, and ask them if I can spread out the payment over 2 to 3 years. Right now, they're giving you a 1-year payback. But if you extend it, your payment will go down and they'll do an escrow reanalysis. Not every lender says yes to that, but they would rather do that than have you miss a payment or get behind and foreclose. Whether you believe it or not, lenders do not want you to foreclose, okay? They do not. So that's power tip number 1. So first, we're going to go over what exactly is an escrow account. I want to just go into this, and I won't go long on this, but I want to go in case you might be just not understanding because your lender might have just told you, hey, you have to do this. And you're like, okay, I know when I bought a house, and I've even done this before, I was like dazed and confused. On closing day, you're like, how quick can I go through this? I'm slammed at work. I'm just going to sign these papers. Like, it's a lot going on. I super get it. So an escrow account is a holding account. Just think of it as a holding tank. And your property tax and your property insurance are divided by 12. The annual amounts are divided by 12. And then that is tacked on top of your principal and interest payment. And if you have PMI, that's in there too. So it's a part of your whole payment. And it accrues every single month. And then at the end of the year, your mortgage company will pay property tax. And then on whatever the anniversary of when you bought the house, like if you bought the house in June, the homeowner's insurance will renew actually a month early. It'll renew in May. So, taxes and insurance are not always paid out of your escrow at the time. Now you're probably wondering, I've got a question. Thank you. What is PMI? PMI is private mortgage insurance. So if you got an FHA loan, you definitely have mortgage insurance. It's mandatory. And if you have a conventional loan and you put less than 20% down, then you've got PMI, which is private mortgage insurance. So that's a great question. Thank you. So escrow account, again, it's the holding tank for property tax and property insurance. It does not include homeowners association fees. This is super important, and I'm going to stop here. I actually had a past client. We closed her loan 4 years ago, and she called me frantic, and she says, oh my gosh, I've thought this whole time that homeowners dues, that's those community dues. So people confuse homeowners insurance and homeowners association. Now in Texas where I live, there's HOAs, homeowners associations everywhere. We are not deed restricted in many places. So you may or may not have an HOA depending on where in the country you are. But if you do, make sure you know that it is not included in your mortgage payment. So those are usually due annually. So you need to pay that separate. So homeowners association, that's a term that if that rings a bell with you and you're like, hey, yeah, I have a neighborhood fee and I haven't paid it in a while, check it out because this client was in big hot trouble with her HOA and attorney's fees and all that because she didn't know that it was not included. So escrow account, back to escrow account, what it is. The lender will collect these amounts. They'll pay them out annually. Now, the escrow analysis, so when they do this, they have to ante up. They have to wipe the slate clean and make sure, are they collecting too much? Are they collecting too little? Now, it is time for a party when they're collecting too much and you get a refund. That's not what we're going to talk about today, but if you're one of those lucky few that you overpaid in escrow, you're going to get a check, and you can cash it because they're going to send it with an analysis and say, hey, we were collecting too much, and guess what? Your payment went down and you have a refund. So that has happened to me. I've had small amounts. I've had some big amounts. One year I got, a few thousand in the mail. It was awesome. Doesn't happen often, and it's not really happening these days because around the country, values have been going up and homeowners insurance has been going up. These are the only two reasons your payment would go up, other than not paying and having a bunch of attorney's fees and all that. That's a whole different reason. But property tax and property insurance going up is a reason for your monthly payment to go up. Your principal and interest, if you're on a fixed rate loan, is always the same. Okay. Now, escrow. So every year the lender says, hey, you have a shortage or an increase. You have a shortage, meaning we paid out more than we took in. So hang in there. We're going to go through how that is calculated. But first, you're probably wondering, can I get rid of escrow? Can I just make this go away and do it myself? The answer is maybe. So I'll give you the quick rules about that. If you had an FHA loan or a USDA loan, if you had a government loan, it is mandatory. You cannot get rid of what's called, it's called mortgage insurance premium on a government loan. It's kind of the reverse of PMI, the acronym, but it's called a mortgage insurance premium, and it is mandatory. You could have 80% equity in your home. It doesn't matter. PMI, MIP, mortgage insurance premium, is required on FHA loans. The only way you could get out of that is refinancing to a conventional loan. And if you're under an 80% loan to value, meaning you have 20% equity, that's the only way you can get rid of it on a FHA loan. Now let's hop over to conventional. Sorry, I was talking about PMI here. My head is full of so many things. We're talking about escrow. So let me just recap for a minute. PMI, you're probably wondering, and I just answered that. But on escrow, on FHA loans, escrow is 100% required. So sorry for the side sweep there. On MIP, it's just, the middle of the day. So escrow is required on all government loans, VA, FHA, USDA, etc. Now, if you have a conventional loan and you have 20% equity, so you're below an 80% loan to value, you can petition to waive escrow. Now, be prepared that the lender is going to, whoever you pay your mortgage to, they're your current lender, okay, which might be different than who you closed with. Maybe company A closed your loan and then they sold the servicing, and that's who you call. You call the people that you're paying to right now and say, hey, I'd like to waive my escrow. How do I do it? And so they're going to give you instruction, but be prepared that they are going to charge a fee. Now, again, this is on conventional loans that this is going to be, that we're talking about. On government loans, you can't waive escrow. So the fee, you're like, why is there a fee, Jennifer? Why am I being charged to control my own money? So that's a great question. The reason is because you're more administrative work for them, because they have to track you down every year to make sure that taxes and insurance are paid. And there are statistics, y'all. It's called statistics that show that people that don't pay escrow mandatory with the lender have a higher chance of foreclosing. Now, that probably doesn't apply to you, but we're talking about statistics. So lenders say, hey, we want to give a premium. We want to give a benefit to people that escrow with us because we know that it's getting paid because we control it. Okay. Now, despite what you think, they don't make any interest on your money. This is false. That is fake news. It does not happen. It's because they know that it gets paid and they know that you're not going to be delinquent with the county. You're not going to get foreclosed on by the county for property taxes because they control it. That's why they like escrow, because they can be sure that it's paid. So if you want to waive it, the fee is about 0.25% with most lenders. Double check. But it, sorry, I had to make a little thing here. Sorry, I had something going on. Sorry, guys, I had a little technical difficulty for a second. So 0.25% times your loan amount is the fee for waiving escrow with most lenders. So if, just for an example, if your loan is $100,000, which good for you, by the way, if you have a loan for that amount, times 0.25%, that's a $250 fee to waive your escrow account. Okay, so 200,000, you can double that. It's a $500 fee. So they will require that from you before the account is waived. Okay, now if you're not paying, or if you ever get behind or don't pay taxes or insurance and they find out about it, trust me, they will force escrow on you, and you do not want that. So make sure that you keep track, if you do waive, to pay those things on time. So we have a question. Thanks for the question. So my mortgage company will pay my taxes and insurance if I have an escrow account. Yes, if you have an escrow account, your taxes and insurance, just to repeat, will be paid by the lender. You will continue to receive those annual bills in the mail. Not to worry, it's your copy because you're the homeowner. You're going to definitely every year get a copy. And so you want to keep that for your records because you need to have that information. But your lender will pay those amounts. So good news. That's one of the benefits of having an escrow account. Okay. So that goes into the advantages and disadvantages of escrow. So why should you even escrow if there's even a chance that your payment, excuse me, guys, if your payment will go up, why would you want to have an escrow account? Well, convenience, number one, and not forgetting, I have an escrow account personally. I don't have to because I have enough equity in my home, but I choose to escrow. I pay a lot of taxes. My taxes are pretty high, and I don't want that bill every December at Christmas time. I've tried to do it on my own and put that money on the side. And one month I'm like, I've got some big expenses this month. I'll just do it next month and catch up. And then that month passes and that month passes. And if at the end of the year, I don't have the money that I thought to pay it. Now, I could take it out of savings. I could take it out of savings, that's for sure. But I don't want to do that. I don't want to dip into my savings. I like to pay things with income monthly so I don't dip into my savings and be tempted to do that. So it's just a convenience thing. If you do have 80% or less in value, then why would you choose? You would choose for convenience. Now, another advantage or disadvantage really of escrowing is what we're talking about, which is my payment has gone up and I don't want my payment to keep going up. So that is the pain of escrowing. But if you're prepared for it, which is what my goal is for you here today, is to prepare you so that you understand escrow shortage so that you can get ahead of it and welcome it like a good thing. So I have 2 properties right now, my homestead and an investment. I actually have a shortage going on right now. Actually, I have a pretty big shortage because I bought from a builder on the investment property. I knew from the get-go that I was paying tax on the land. And I knew that there would come a day that I was going to have a $10,000 shortage. And that's exactly what happened. And I had the money because I was knowing about it, that I have the money when they say, Jen, we want you to pay that, I'm going to pay it. So my payment doesn't go up. Okay. So because I'm prepared. Now, so disadvantage of escrow is that you have to deal with yearly ups and downs. If you understand it, it's not that big of a deal. You'll actually love it. Like, I love it. I can use that money and, do other things with it until they say, hey, Jen, it's time to pay up. And I'll say, okay, yes, I have the money right here to do that. So how is the shortage calculated? You're probably wondering, Jennifer, how do I understand this bill? So you have to have gotten an escrow shortage letter. They do not, if you have auto email, everyone's, e-delivery these days, they have to mail you the shortage letter because it's so important. They give it to you both ways, an email, if you've got that set up, e-delivery, and they do it in writing. They have to. So make sure that your address is current. If you've moved or don't live at the property, make sure they have your correct mailing address. Like on my investment property, I'm not going to rely on them to give me the mail. So I went online and I changed my mailing address to make sure that the mail comes to me. So you look at the escrow analysis. Now, it is like reading a different language. They are hard to understand, but I'm going to simplify it for you. Just think about proposed, meaning, hey, we're forecasting what your tax and insurance were going to be for last year, which at the time of this is 2023 was last year. So last year we proposed and we forecasted that you were going to be paying this amount. And then the actual was this amount. So they'll have two columns, proposed and actual. And the difference between the two is kind of what you owe, but we're going to go through that a little bit deeper. So I have my notes here. I'm going to look down. So let's just say that your property taxes are $400 per month, okay? Which means that your tax bill is $4,800. But $4,800 divided by 12 is $400. So let's say that they're collecting that. They take your annual, or what they thought your annual was, and they divide it by 12. That's how we got your escrow payment. And on insurance, let's say that it's $200 a month, which is the equivalent of $2,400 per year for insurance. Now, I know those of you around the country, you're like, that's high for insurance. Well, welcome to Texas. That's a kind of a Texas thing. I don't know what you pay if you're watching this, but let's just go with me for the example for a minute, okay? So let's say that your insurance is $2,400 a year. Divide that by 12, that's $200. So monthly, they're taking out $600 total, $400 for tax, $200 for insurance, and that adds up to $600. That's added on top of your principal and interest payment. Now remember, if you've got PMI, that's in there too. So your principal and interest payment is increased by that $600 escrow. So let's say that we're in March. Let's just take a teleport there that we're in March. February, March is when all of the lenders pretty much analyze your escrow account. Most of them, not all, but most. They analyze in February, March, and they say, are you short? Are you over? Whatever. So when that happens, what they do is they look at, let's just say, last year, let's say they assumed the $600 a month, times 12, that's as if your bills were $7,200 per year, right? And then they paid out, actually, let's just say that they paid out $10,000 total. Let's say between your tax and your insurance that they paid out a total of $10,000. That's a shortage of $2,800. You take $10,000 minus what they expected, which was $7,200, and you get $2,800 shortage. So they're going to do that analysis in February, March, and they're going to send you a nice little letter called an escrow analysis letter. And they're going to say, hey, you have a shortage. This is the column of the proposed, and this is the column of the actual. The difference between the two, you're short by this amount. You can either A, pay it in full, like that's what I plan to do on my little $10,000 shortage that I'm going to have, but I know that it's coming. So in this example of this one, you could pay that $2,800 shortage in full, and it would just get paid to them because they've already paid that money, y'all. I want you to understand, they're looking back on something that they've already paid on your behalf, okay? And they're saying, hey, you can either pay us in full or we're going to give you a 12-month interest-free loan. They don't charge you interest to pay them back over 12 months. It's like a 0% credit card, y'all. And I might do that on mine. I might say 10,000 divided by 12. I just might take that little increase in my payment. I don't know yet, but that's for you to decide based on your finances. So they're going to say, hey, we're going to divide it by 12. And if you divide 2,800 by 12, that's $233 a month that your payment is going to go up for 12 months only. So after 12 months, the payment will go back down. Okay. But you have to wait because it's going to go up a little bit more. It doesn't only go up by the 233 that you're short. They don't want you to be short next year, y'all. This is what y'all don't understand, and I want you to understand happens. So they increase you 233 to pay back the shortage, but then they're like, hey, we also want to make sure that you're not short next year. So we've forecasted that next year your payments are going to be, they're just going to forecast that it's the same as last year. So if last year it was 10,000 total, they say that that's the best info we have. We're going to estimate that it's 10,000 next year too. So we need to increase your account again so that you're not short next year and we don't have the same problem. So that's like it's going up double. So you can just take that 233 shortage and double it. So your payment really is going up by $466. Okay, now this is just an example. But again, you've got to think of it from the lender's perspective of tax and insurance together as a whole is how they're getting these numbers. So these are the basics of how escrow is calculated. And one thing I'm not accounting for that's also thrown in there is what we call cushion. So I'm simplifying this so it's easier to absorb. But really, your payment probably is going to go up even a little bit more than the $466 in this example, because there's something called cushion where your account has to have 2 to 3 months cushion at all times, really. So if there's no cushion in there, they're actually going to pad it a little bit more. Now, I want to pause for a sec and tell you about escrow, this cushion that we're talking about. Whenever you pay off in the future, like if you sell, if you're the one that says, hey, I want to waive escrow, give me my money back, or if you refinance, then any of those events will trigger a refund of what's in your escrow account. This is actually really important that I don't think y'all realize. So whatever's in your escrow account, no matter what month it is, whatever's accrued to date and the escrow balance is, that's what you're going to get back. It usually takes 3 to 4 weeks once you do one of those events that will trigger the sale, the refinance, or the waiving of the escrow. The loan gets put into this little queue, like, oh, hey, this is finalized. We're not doing this anymore. And then they cut you a check and you cash it. So you get this check in the mail. It's really a great thing. So I'm going to pause for a sec. We do have a question. Hey, Tara. Great. Thanks for joining in. She says, our escrow shortage made our house payment go up by $600 a month year after year. It was insane. Oh, my goodness. Well, Tara, answer me. I bet your house was new construction. I'm assuming. I could be wrong. But if it went up $600 year after year, it means that what that means is that, yep, she was new construction. I knew it. Is that it goes up the first year, and you have to remember, since 2020, everywhere around the country has seen an increase in home values. And it takes a cycle or two, which it takes 1 to 2 years for that to catch up. So like I bought my investment property like 2 years ago. Like I knew this was coming, but I'm going to wait for the lender to catch on to it. I'm just going to keep my money invested and do other things. But they only analyze escrow once a year. So that's the only opportunity. In most counties around the country, you might live in one where taxes are paid twice, I don't know, but your lender's only going to analyze your account every spring, period, end of story. They're going to analyze it once a year. Now, you might get lucky. There might be one that analyzes it mid-year. There's some lenders out there that just wait till the summer for whatever reason. So you just have to check with your lender like, hey, by the way, when are you going to analyze my escrow? When do you do that every year? But most of them is February, March. So in Tara's example, she had an increase, and then she had an increase again because probably that next year her value went up again. Now, I'm talking to a multitude of people here. So if you're in Texas, there's something called a cap where your taxes can only go up, if they're to go up, 10% a year. The value that you're taxed on can only go up 10%. If you're in another state, I don't know how it works, but here that's how it works. So, and that's if you live in it as a primary residence only, not investment or anything. So you can only go up 10% a year. Well, let me tell you, we've been going up 10% every single year like clockwork because the values keep going up. Now, one of my bonus tips that we're gonna talk about towards the end is gonna talk about how you can avoid all this or mitigate it, okay? But that's how it works. Thanks for the question, Tara. And we have another question. How long does escrow shortages last? It lasts for as long as you have a shortage. That's the answer. So that's why you might elect to, that's why I'm probably going to pay my shortage in full because I just don't want to jack with it, and have the cash flow, whatever. It might be just, let's just pay it. But if you spread it out, especially if you call that lender, remember my power tip number 1 in the beginning about asking them to spread it out over 2 to 3 years, if they will do that. I hope that they will. They'd, again, probably rather do that than you be late. Then it's going to go on. And if in the meantime, next year, let's say you're doing the 2 year thing. And let's say next year, like in Tara's case, taxes went up again. And so she was short again. And then in the meantime, her insurance went up. That's another reason, like they both don't have to go up for it to increase. Now, insurance all over the country is going up. So you want to make sure on my YouTube channel, Loan with Jen, I have videos about all of these things. So if you go to my channel, go to YouTube and go to Loan with Jen and type in the word in the little search guy, type in the word insurance. And I have some really good interviews with insurance people about taxes and what's going on, or insurance, sorry, and what's going on, et cetera, et cetera. So anyway, that's just a side note. But we're talking here today about escrow, and your escrow, your payment has gone up. So we talked about shortage and how that's calculated. If you have any questions about that, please let's hear your comments. So these are the biggest mistakes I see, and this actually sounds like it happened to Tara. It's either A, her lender, and I'd love to hear your comments, Tara. Comment again. Did your lender warn you that when you bought the house? Like, did you know that that first shortage was coming? I'm hoping that if you buy a new house, now we live in Texas and there's new homes everywhere. So if you bought a new house and the lender for the builder may, or whatever lender you used, may or may not have clued you in on the shortage that is coming. So I want you to think about it this way. You buy the house in July, and that's middle of the year. And they only assess values once a year, and it's in January. So in January, the county went out and said, oh, hey, there's just land here, $50,000. So at the time that you closed in July, you're paying, the builder's paying tax on $50K. Like, this is like party time, like disco. Like there's no hardly any taxes owed. And so the lender, we really can't collect escrow from you for something that doesn't exist. So your taxes were based on the 50K. And then next cycle, so imagine that year that you buy the house in July, that whole year you get away with low tax. And then the next year, in January, the county, they're reassessing properties again, and they send their little guy out in his little truck, guy or girl, in their truck, and they drive by. They actually do that. Like, they send people to go drive by places, and they go, ooh, it's not land anymore. There is a house here. This is awesome. Ching, ching. We get to charge more money. So now your value goes up to $400,000. So now they realize, like, hey, there's a house here. We're going to charge for this tax year $400,000. We're going to charge tax on $400,000. So guess what? You're still making that super low payment until like a year from now, because they assess it, but then they don't send the bill until November. We're like a year and a half after you bought the house. And you're like thinking you're on easy street with this payment. So again, they assess in January. Then there's protest period. You can fight taxes. You know, every county has different ways to fight it, but that usually happens mid-year. And then the bills don't come out, or at least in Texas, the bills don't come out until November. And then they pay in December. So they say, okay, bills come out in November. The taxes are now $10,000. We're going to pay it because that's what we do. We pay escrow. We don't care that we don't have the money from Tara. Tara, I'm using you as an example, because they got to pay it. That's what they do. They pay it even if they don't have the money from Tara. So that's December, a year and a half. This is what I want y'all to understand that is so hard to comprehend. This is a year and a half after Tara bought this house, and she's on easy street with her payment. Like, this is the best thing ever. This is like better than peanut butter and jelly, like low taxes. Well, then a few months later, in like March, a year and 9 months after she bought the house, she gets a letter. Tara, I'm assuming this is what happened to you, girl. She gets a letter that says, hey, your taxes went up. And she's like, what are you talking about? And then she had a big old fat shortage. That's what happened. And then in the meantime, the values went up again. And she doesn't find that out until the next March, because those bills for that year that she's in with the shortage don't come out until November. So you see, it's a vicious cycle. Oh, and by the way, in between all that, her insurance went up too. So that's how long, you ask how long shortages can last. They can last. And there's many people that have to escrow. It's mandatory because you don't have enough equity yet, because you got into the house with zero down payment assistance, or 3 or 4% down, which is great. But I want you to be prepared. And Tara actually commented back and said, I was so, with lots of O's, uneducated about lenders and just went with the builder provided one. And I had no education about how it may go up. Yeah, that sounds about right. And that actually, like, there should be mortgage jail for escrow avoidance, because lenders, we know that it's coming. We know what's going to happen. So I make it a practice. You know, I'm only one lender, y'all, in thousands. And I educate clients front up, and I'm hoping that whatever lender you have, that they're doing that too. But here's what if you're watching this, and you're obviously probably a homeowner already, but if you ever buy a new home, this is going to happen to you. This shortage will happen, hands down, 100%. So I want you to ask questions about it. Ask the lender, like, hey, what happens? What's going to go on, etc. Or just DM me and I'll help you explain, and I'll send you one of my videos. Or another time this can happen. So there's one more time, and then I'm going to give you the bonus tips on how to get your payment down that I promised you. Okay? Is you're buying a new home, or, you know, just a home. It doesn't have to be new. You're buying a house. and you're buying from someone that has super suppressed taxes. Again, I'm just talking to you as if you're in Texas. You might be somewhere else, and I don't know how taxes work in other, in every other state. But in Texas, when you're older or you're disabled, you get low taxes, like you're super capped. So let's say, and let's say that I've lived in the house for 30 years or 20 years. So if you're a buyer and let's say I'm a first time buyer and I'm like, oh my God, I'm so excited about this house. I'm going to buy this house for $400,000. But the seller is paying tax as if it's worth $150,000. I actually had this happen recently. And you're thinking, oh my gosh, these taxes on this house, like this house, they're this, and the house next door, the house is next door. It's on like this, it's really lower. I'm just going to buy that house. Well, there's a reason. And the reason is because you're buying from someone that is either A, older, or B, lived in the house forever, or C, might have a, disability discount or something. You don't know. Their taxes are super low. The same thing that I explained about new construction, the same concept is going to happen, and it's going to take one or probably two cycles of tax for this to happen and find out. Hopefully your lender's going to clue in to that and tell you on the front end. I just had a conversation yesterday with a new home buyer couple. And I said, hey, I just looked up the taxes and they just got under contract like a day ago. I said, I just want to warn you, this is going to be your tax now because we can only collect, like let's do the example of the $400,000 house and it's being taxed on $150,000. Listen, you're going to get Easy Street for the rest of this year. We're going to close in June. You're going to get 6 months of low tax. This is fantastic because that's what the seller's paying. And the county's already assessed the property. They're not going to change it mid-year. But then next year, I want you to start saving this amount every month in a savings account so that you're prepared when that happens. Or you can just pay it to the lender. So this is my power tip number 2. If you know the shortage is coming, you've got to put that money aside. And you can do it in one of 2 ways. You can A, put it on the side by yourself in an account that you will not touch. Don't spend it on stupid crap you don't need. Okay. You have to save this money, y'all. You have to put it somewhere. Like I literally put it in a bank that I had to drive to. Like I did not get the phone app. I don't use that account for anything else. I knew that I would spend it. Literally, I knew. So I literally put it, I had my paycheck, send it out. And I mean, I know I'm a mortgage lender, y'all, but I like to spend money too. Like I like to shop. Okay. So I knew myself and I said, I got to put this somewhere that is out of reach. And I did, and it was okay. So make sure you put it in a place you don't spend that money. Or yes, you could go ahead and pay it to the lender every month. I want to just warn you about what happens when that happens, is that it could get applied wrong. Lenders are humans too. There's people that work there that are typing away, entering your stuff, and they might enter it wrong. Sorry. So just beware, make sure every month when you check your statement that it was applied the right way. You have to tell them that it's going to escrow. So make your normal payment, whatever that is, $1,533. I hope that that's your payment. That would be an amazing payment. So if your payment's $1,533, pay that. And then go in and make a separate transaction, or if you mail the check in, mail a separate check or bill pay or whatever for a different amount in addition to your payment, and put in the memo escrow, because if not, they might apply it to principal. And to unwind that, that's the downside of escrow, is that they might apply it the wrong way. So I'm just warning you and letting you know, stay on top of it and make sure you have it applied to escrow. Okay. And then just double check your statement to make sure it was applied the right way. And your escrow account will just accumulate. And then when they do the analysis at the end of the year, you're not going to be short because you were planning ahead. And from, whatever month, let's say January, let's say you bought the new house in July and you're like, yep, I was educated by Jennifer about this escrow shortage and I know about it. And starting in January, she told me to make the make the, start making extra payments. Because remember, when you buy the house in July, your payments aren't going up that year. So don't make the escrow payment yet, because they'll just refund it to you. They're going to be like, oh, you paid too much escrow. So don't do that. So start at that next January. It'll accumulate. And when they go to pay the taxes that December, a year from now, they're going to go, oh, yeah, you got the money in there. Cool. Not short. Or your shortage will be super small, from the actual. So I know this is a lot of information. I'm brain dumping on y'all all about escrow. I get it. It's hard. But I'm hoping that you got some understanding of how it works. I do have another question. Thanks for the questions. Do you recommend having an escrow account if you're not required to have one? I do, because I understand it. If you don't understand it, or if you know you have a big exemption coming, like you're turning 65 soon, or you just don't want to deal with it, or whatever, you might decide to do it on your own. But there's a lot of people that don't have that luxury because they don't have 20% equity. And that's, and there's a lot of people that leverage their money. There's some people that put low down so they can leverage their money in other ways. So I recommend you do, if you understand escrow and you're okay with potential shortages and you can understand it. If not, and you don't want to jack with it, then waive it. But just be prepared for that fee, because they're going to charge you to waive it. So if you're prepared, that's cool. So thanks for the questions. All right, so power tips. We're going to finish up with power tips. So power tip number 1, we talked about, call the mortgage company and ask them to spread over 2 to 3 years. If they say yes, good job. Just remember, another shortage could accumulate on top of that, because insurance is going up, property taxes are going up, and I think it's going to continue to happen little by little, hopefully little by little, but it could happen. The second one was, another power tip is pay the amount due and just pay it. And then your payment will still go up. It's not going to go up by the shortage, but it is going to go up by that little differential to make sure that you're not short in the future. So if you want to avoid both of those increases, pay the shortage and then influx more money into your account to hold it for when they pay it next year. I personally, I don't like to dip in my savings for things that I haven't planned for if I can help it. So if you're okay with the little increase, then do that. But I hope you understand, you got to kind of flux into the escrow twice, one to cover the shortage and one to cover the future shortage that's going to happen again if you don't do that. Okay, so be careful about that. The next thing, power tip number 3, is fight your tax bill. Now, in Texas, in Houston where I live, you get to do that every spring. They announce to you, they send you a letter. So check your mail. That county appraisal district that you live in will send you a notice in writing that says, hey, we've said that your bill, your taxes are going to go up. Your value was $400,000. And guess what? We're increasing you 10%, because the market's really at 500, but we can only increase you 10%. So we're going to increase you to 440. That's 10% times 400 is 40,000. So instead of taxing you on 400 like last year, we can only go up 10% to 440. Really, the market's at 500. They show you what they think the market value is, but we can only increase you 10%. So we're increasing you to 440. You're lucky because the market really is at 500, but we can't do that. And this is on a primary residence, okay? So you can fight, but even then, you can fight your tax bill. Like this year, they increased me 10%. Every year I fight. It doesn't always work because my county that I live in is very difficult, but I try. So I hired a company this year. I turned it in and they're going to fight it. We're going to see what happens there. But the point is, you can fight your taxes, but you better have good reason and comps. So that's a good time to contact the realtor that helped you to give you comparables of properties last year to fight and say, hey, my house is not worth this because this, that, and the other. And on my YouTube channel, again, I have a video called Protest Your Property Taxes, and I go step by step. So go to Loan with Jen on YouTube. The long form video is there. I think that one's like 20, 30 minutes, but it's step by step how to potentially, like, reasons to protest your taxes. I'm not a protest your property tax expert, so don't ask me to do it for you. I can't help you with that, but I can educate you on some reasons to potentially do it. Okay. The last thing, well, the next thing that you can do, the last one is, we're going to talk about insurance for a minute. So my suggestion is that you do it before your escrow account renews. So you're going to get 2 months ahead of time, you're going to get a memo. You're going to get something in the mail about your insurance. Remember, you're the owner. You're going to get bills. So if this is an investment property for you again, or if you have a different mailing address, you have to be sure that the lender knows about your new mailing address. You're going to get mail about, and from your insurance company too, that the insurance company knows your address. So they're going to mail you like, hey, your insurance was $3,000 a year and now it's $5,000. This happened to many Texans. Insurance has been crazy. You got to fight it. I fought mine this year. I saw it. Mine was like, it wasn't doubling, but it was like going up by 50%. It was obnoxious. And I said, okay, I cannot do this. This has to stop. So I searched around with everyone, and I did finally one out of many. And I'm in the industry, y'all. I know how to do these things. What happens to me too? I had to work hard. It took me over a month to find it. But I dug and I dug. I asked around, I asked friends, and it was actually a friend that said, hey, why don't you call these guys? And I was like, oh yeah, okay. Now I'm not going to tell you who it is because they're not always the cheapest. Doesn't matter, but it's a big name, person. But there's insurance everywhere. Costco has insurance and State Farm and AAA. I don't know. Check with all of them until you find the answer, if you can. Okay. And then what you do, now this gets really tricky, but I'm going to end with this one. If you do change your insurance, you got to be prepared. It's a little bit of a trick. You've got to send the new insurance to the lender. Even though your insurance company is going to do it, I'm just telling you, it's going to get messed up. So you got to be on top of it and take really good notes and call the mortgage company and say, hey, I changed insurance. Talk to the escrow department. I changed insurance. Where do I send it? They're going to give you some special place to email it or upload it. And that way, when they pay the premium the next month, they'll pay the right one. Now, in my case, I did it after the fact, like a dodo brain. They paid, anyway, I don't even want to say it. You're going to freak out. But, well, I guess I'll tell you. They paid my insurance 3 times, okay? But I knew what I was doing, but I was out some money for a little bit, and I got it all back, but it was obnoxious. So when your insurance bill comes, if you know that the anniversary of your insurance is August, set a reminder for June to start looking for that renewal and shop for the insurance ahead of time. Because if you do it after the fact, it's just, they've already paid it. They paid the one that you don't want anymore, and then you got to pay the new one. It's just a hot mess. Okay. So that's a downside of escrow if you don't understand that. I hope that makes sense. I don't mean to leave on that negative note. Escrow can be a really good thing. I do love my escrow account because it lets me put money away with my cash flow every month and, use my savings for other things. And you might be one of those people that has to escrow. You don't have a choice. So you have to understand this stuff, y'all. Oh, hey, Julio, thanks for joining us. So you might not have a choice. So you've got to understand this. Don't run from it. Try to embrace it. I hope this has helped you. You DM me with some questions if you need, and I'll try to send you some, I'll send you some other videos from, some longer form videos of whatever platform you're watching me on. Have a beautiful day. And let's go get those escrow accounts lowered, people. We'll talk to you soon. Bye.